Welcome to the Family Business Audiocast on LinkedIn. I am R. Adam Smith, creator of this audiocast series. As an entrepreneur, investor, founder, investment banker, and board leader the last 25 years, I'm fortunate for my many experiences within the family firm industry. A warm thank you to our live audience on LinkedIn today and for those listening in the future. A brief comment on why I created this broadcast. Private companies are a passion of mine, having grown up in a family of entrepreneurs and having engaged for 2 decades in deals, strategic transformations, investments, and boards with an array of fascinating family enterprises, family firms, and family offices. I founded this series to offer a useful platform for listeners to hear from veterans, academics, and leaders in the vast family firm ecosystem. Whether you're a family business owner, building, running, or advising a family office, or just expanding your family office activities, I hope these conversations are useful and enlightening. And now it's time to turn our attention to our accomplished guests on today's episode. And I'm very pleased to host my friends and sports legends, Drew Sheinman and Brett Johnson. Great to have you both here today.
Thank you, Adam. Great to be here.
Absolutely. Okay, a few words on you guys. Drew Sheinman is a founding partner at Brand Velocity Group, boasting over 20 years in leadership across many industries that we all love and know: entertainment, sports, media, and also fashion and other areas. He's been a pioneer in the media and sports industry for many years, including notable roles in the Breeders' Cup, Brand Ventures, also head of business development for Madison Square Garden, and related roles in Coca-Cola, the Baltimore Orioles, and the New York Mets, and currently working with Eli Manning and other partners at his investment partnership, which we'll talk about today. Drew's groundbreaking accomplishments have earned him many features, of course, in media outlets such as CNBC, New York Times, and is just a real gentleman and veteran in the industry. Brett Johnson, also a good friend and veteran in the sports industry, as a versatile entrepreneur and investor with a significant track record in real estate, manufacturing, consumer brands. He is a founder of Benevolent Capital and also a partner at Fortuitous Partners. And he has recently, last couple of years, led the Phoenix Rising FC to tremendous growth in Rhode Island and has been recognized in his contributions to business and also community service and development, and has received the Distinguished Alumni Award from Pepperdine University's Graziato School of Business, and serves on the boards of several other private organizations, including the Business School. All right, let's get started. Let's start with you, Drew. So BVG's story is marked by significant differentiation and acceleration in the private equity space. Please elaborate a bit on your unique approach, particularly in integrating the whole range of marketing, business development, culture into investment strategy. You guys talk about sharing the gains, which is really interesting in terms of sharing 10% of your carried interest profits to the employees of those acquired companies. So let's talk about that, how that reflects your approach to corporate culture and employee welfare.
Thank you. So when we started BVG, we saw an opportunity in the marketplace to differentiate private equity, to make great investments for sure, but more importantly, to care about people and corporate culture and to do the right things by the employees of the companies that we acquire. So as Adam mentioned, we started a first ever program called Share the Gains, where we, as the GP, take 10% of our carried interest and give it back to the employees of the companies we buy, which is very much aligned with those great family founded entrepreneurs who want to do well, take some chips off the table, selling to a really good group of entrepreneurs, private equity investors who will not only care about their employees, but also bring significant value from a marketing, business development, as we talked about, human relations, culture side of the business. And all those things together make us a huge differentiator. On top of that, as Adam mentioned, Eli Manning is a business partner of ours. We work with many athletes as LPs in the deals of the companies that we acquire, but they're not just fancy, famous names. They're people who are very involved in the business and help grow the companies that we acquire through organic growth, business development, opening doors, and really helping to support all things around the success of the business over time.
That's great. Maybe a bit more on Brand Velocity Group, since it's relatively new and you were sort of in stealth for a couple of years. Now you've blown out, almost investing about $500 million in multiple companies. Just would love to hear more about BVG for our audience today. What does it stand for? Where do you invest? And what are some of the metrics of the organization?
So Brand Velocity Group is a private equity firm. We're focused on buyouts of companies that have EBITDA typically of $10 million or more, and typically 75 to $100 million in sales, focus in the consumer sector, broad category of consumer. We own a footwear company. We own a youth sports uniform company. We own the largest direct-to-consumer marketplace for home grilling and outdoor living products. We own a women's fashion brand. And those things combined, we've been very focused in the sports and entertainment space, as many other private equity firms have. And that led to us buying the youth sports uniform company about a year and a half ago. We have a couple of other deals we'll be announcing over the next 2 to 3 months in that space, and not really interested in the quote unquote trophy vanity plays. While we're passionate about sports, we're really passionate about being good capitalists and making money around great deals. And we pride ourselves on being very entrepreneurial, scrappy, independent, because we're not a fund. So we find deals and we syndicate the capital raising around each of those deals. And to date, as Adam mentioned, 5 buyouts. We put about $300 million plus capital to work, $400 million of assets under management, and really just getting started in terms of our growth and positioning. But most importantly, our message has really resonated with, again, those family-founded entrepreneurs who really want to take some chips off the table and have a great ride going forward with great partners.
Wonderful. Thank you. I think some of these themes are also relevant to Benevolent Capital. Brett and I started looking at deals together over about 15 years ago. And I'd like you, Brett, to share a bit about your background building into Benevolent Capital and also your thoughts on some of your approaches to investing with your family offices and into family businesses. I know you focus on long-term legacy as well. So how's your approach to that legacy and long-term investment gains and continuity? How does that relate to your investment strategies? And maybe talk about your investment in TerraSockel, which is also related to legacy and sustainable wealth.
Yeah, thanks, Adam. Great to be here. Yeah, from my arc of my career, I started Benevolent Capital, which I refer to as my family office with my identical twin brother, which, if anyone spends any time kind of looking at the depth and breadth of our portfolio now encompasses a diverse group of venture capital, private equity, and now professional soccer anchored opportunities, including a great deal of real estate specific to my project in Rhode Island. But we also have an investment in Ipswich Town, which is now up in the Premier League. It was 2 levels below when we bought it 3 years ago. So back-to-back promotions there. But in short, it did start actually with TerraCycle. That was my first investment. Tom Zaki, incredible entrepreneur who dropped out of Princeton. He created upcycling, the ways to divert waste from landfill, and has built a global company. He operates in 70 plus countries around the world, works with major brands. He's key speaker every year at Davos and a real thought leader in the space. And increasingly, TerraCycle's looking at a new platform where finding ways to get rid of the concept of waste. So they've launched with big retailers in the States and overseas where you buy through their Loop program. When you buy a consumer good, you have the ability to return the packaging and it gets cleaned and it gets reused again, which, if they can pull it off, it would be incredible. The world needs it, candidly. But in the meantime, I hope I answered your question. But from my perspective, I'm now kind of full-time entrepreneur running my family office, and I partner up with other family offices, and I always put my money in all my own deals. I don't charge management fees. I provide incredible preferred returns to my investors before I take a promote. So we try to make it as investor friendly as possible.
Wonderful. Thank you for that. You both worked extensively with family-owned businesses. Drew, in your roles at BVG, Coca-Cola, and Brett, with your integration of family businesses in Phoenix Rising and other ventures. So how do you effectively integrate family-owned enterprises into the larger organizational ecosystems and your investment portfolio? And how do you approach that relationship with a family business to create success, whether it be, a family office investing with you or investing into a family-owned business?
Sure. So I think that the biggest thing for us is just alignment, which sounds simple and oftentimes can be very complex, but we take great pride in being collaborative with the CEOs and with the companies that we acquire over time. And as we go to acquire a company, we basically go through the proof test and have our new CEOs to be talk to other CEOs to get a validation that we are very different in our approach to alignment with the CEO and the management team. And while we bring so much operational expertise and value, we really are supportive. We're not intrusive. We'll let the CEO and the company run their business, but around the edges to help in any way that we can. In terms of family offices, we've worked over our last few deals more aggressively with family offices. We think it's a great category of interest because we share many of the same family values in terms of our approach to private equity, our approach to corporate culture, our approach to taking care of as we think about our portfolio companies as families. And while we're not an impact fund, as we talked about, with share the gains in our give back program to the employees, we think it's very much aligned with the way family offices think and operate and want to be involved in great partners on the private equity general partner side and also great
Yep.
companies as well.
Great. I want to talk about the white spaces because you guys cover such a broad range of sports. There's so much going on with family offices and family businesses building sports empires, especially in the NFL and soccer teams. So I want to talk a bit about the Football Great Alliance at Endeavor and your experiences there. And then also, Brett, founding Benevolent Capital, like really building leadership at the board level with sports organizations is super key because they are full of a lot of high profile people. So I'd love to hear about how you blend that ambitiousness of these sports organizations and how you get involved in governance and leadership.
Yeah, we're always looking for those white space opportunities where we could add the operational expertise in sports and entertainment. We have an extraordinary advisory team of the really very prolific leaders in all aspects of sports as we describe it. It's the, we can bring those type of investors, family office leaders, et cetera, into the walled garden of sports in an area that myself and certainly Eli and many others around our sports group have lived there their entire lives. So we're really excited to see the interest in sports. That said, we always provide a very objective perspective of the right kind of opportunities, not just from an investment perspective, but also from an activation standpoint. So the youth sports uniform company I mentioned that we acquired, so for that particular deal, I brought on board as investors, by example, Carmelo Anthony, the Mannings, Tim Tebow, Carly Lloyd, Clay Thompson, Marcus Smart, all great names, but more importantly, great people who are very passionate about elevating youth sports, but also very sophisticated in terms of the types of investments that they do. So that's a great representative example of the way we think about business opportunities and the opportunity to have a good return, the opportunity to do well by doing good, and the opportunity to have a great cap table of people who really want to help grow the business.
Exactly. Brett, how about you?
My arc for the last decade in professional sports is it started with Phoenix Rising in that market and then ended up acquiring Ipswich Town 3 years ago in England. And as I said, got it back up to the Premier League. But my primary focus with sports now, the highlight is Rhode Island, what I'm doing there, really taking what used to be very fallow land. It was a brownfield site and in Pawtucket, Rhode Island, which is right outside of Providence. And working with the energy company, we cleaned up the site. We're 10 months away from completing a stadium, which will be an incredible asset. And then we'll develop all the real estate around it. Leading with professional soccer, we've got a men's team. We're going to launch a professional women's team, which I'm very excited about. And then I'm just bullish on what I'd call sort of sports as an asset class, having massive social and economic impact, and candidly democratizing the ability for family offices to get into sports without, trying to buy in at, I don't know, the Warriors at $7 billion, where, I think it's had a pretty good run, if you will. I think there's a lot of emerging opportunities, which are very attractive.
Right. A bit more on that balance between creating wealth and thinking about the, let's say, the continuity or the consistency of these, entrepreneur and family owned businesses. So with Fortuitous and considering like you have background, both operations and private equity, Brett, maybe share a bit on how you approached the Tidewater Landing deal, which is in significant development in Rhode Island. Maybe share a bit on that and how did you create that synergy between the investment approach and the community approach for the local town?
Yeah, specific to Rhode Island, they lost their storied AAA baseball team. The Pawtucket Red Sox picked up and moved to Worcester, Mass. And so I was very quick to buy the rights to professional soccer through the United Soccer League. My primary focus with the asset of professional soccer is to try to find a way that you could be catalytic in terms of transforming the region. the social and economic impact of the right sports franchise and the right investment. I mean, the stadium is a $140 million stadium for a minor league in a small state. It's quite a substantial project. And then when you add on all the real estate around it, the overall jobs that you create is substantial, and the economic impact you make is extraordinary. So I really feel very proud about what we're doing, and the family offices that we've been able to aggregate that are part of the ownership group. Increasingly family offices. In the last 10 years I've been in this space, the shift both from high net worth family offices but also institutional that's coming into this asset class has been fantastic. And I still think we're really in the early days of that.
I agree. I think we're in the third inning there for a baseball analogy. Brett, thank you for that. Drew, what do you think? How are you approaching the family offices investing from the LP perspective versus the GP or board or co-investment partner perspective? We'd love to hear a bit about that, and also maybe just a bit of dichotomy and comparing, let's say, the Endeavor corporate venture model versus the independent investment model would be interesting as well.
Yeah, so very similar to Brett's approach in terms of how family offices can be a part of the opportunity to identify and participate either as investors or actually as active operational expertise that they can also bring to the table, which is, I think, why the family office category is so appealing to us. So that's on the investment side. Also, from deal sourcing, we've had success in finding great opportunities again because we're so founder friendly, and many of those family offices built their wealth on being successful entrepreneurs. And we also take great pride, as I said earlier, in being an entrepreneur. So that alignment, I think, is really powerful. In terms of answering your question, Adam, on the contrast, so as an independent sponsor, a fundless sponsor, we go out and find the deals, we source the capital, we syndicate deal by deal. And we really like that flexibility as opposed to being a fund and being forced to put money to work, because it gives us that flexibility, the nimbleness. And again, we're in control of our own destiny versus being a fund. At some point down the road, it may decide to raise a fund, but not at this stage. We really like that flexibility. It supports our plan and our mission very well. In terms of Endeavor's focus has really been more, besides the Endeavor M&A side of the world, in terms of their business ventures, it's been more early stage ventures. And that's when I brought Eli Manning on board as a partner in BVG, is part of an overall strategy to get more athletes to see the value in private equity versus venture. I like to joke saying most athletes would like to create the next 3 unicorns because one's not enough. So the value in an athlete now is seeing private equity, you're buying companies that are making real money. So it's not a startup. It's not, obviously the odds are very different in terms of success. And that opportunity is very appreciated by the athletes financial support team, et cetera. And is really, I think, great opportunity we've had success with to date, but will continue to grow further going forward.
Definitely. Brett, over to Phoenix Rising FC. It's been significant growth under your leadership, sellout matches, community engagement. I see many family businesses in Arizona have supported the team. Just a little bit more on that family-owned approach to build the club ecosystem within a community is so interesting, and I'd like to hear about how you think that type of approach to making money while also building community is going to be increasingly relevant in today's sports world, including the women's sports area as well.
Yeah, Phoenix is an incredible market. Had basically every sport you can imagine, every professional sport, plus a strong collegiate market, but really lacked proper professional football, meaning soccer. So my partners and I launched the club 10 years ago. Initially, there were some challenges just trying to get the right venue. We now have a great stadium in partnership with the city of Phoenix near the Sky Harbor Airport. But early days, trying in a very crowded sports market, we really did need to kind of tap into families, local entrepreneurs, families that have businesses that wouldn't be able to sponsor with the NFL team or the NBA, et cetera. So really trying to find an option that was affordable for them to amplify their brands, et cetera. The club has done very well. We won the championship last November. Didier Drogba of Chelsea and Ivory Coast fame finished up his career with us, and at some point, the ownership group, I'm confident, is going to look at also launching a women's team as well. Very proud of it. It kind of was the genesis for everything I do with the beautiful game. So I've got a weak spot for Phoenix Rising because that set in motion so much else of what I get to do now.
That's great. I mean, you've both been involved in significant marketing engagement efforts in different industries. Brett at Rhode Island FC and also at Phoenix Rising FC, and then Drew with the New York Mets, Madison Square Garden, and now your sports teams. Like maybe I think it'd be great to hear maybe an example of an initiative that really is driving long-term success in one of your businesses, and maybe connect that to where you see the sports industry going in general. Drew, maybe one of your case studies each would be great.
Yeah, I think the case study I just mentioned about the youth sports uniform company and bringing the right type of ambassadors slash investors to the table, I think it's a great example of the power of the right type of talent being involved in business and doing it for the right reasons. And one of the many reasons I so appreciate what Brett is doing, because again, he's very much aligned with our approach of doing well by doing good. So how do you do that? And how do you do it in a way that's meaningful and do it in a way that's impactful and do it in a way that is scalable, in a way that really is worth the time and effort and the investment and particularly the return on the other side. So we didn't just look at it as a uniform company, but looked at it as the broad category of youth sports. And who doesn't believe in the value of helping kids live a better life and all the great learnings and teachings and experiences being involved in youth sports? And then if you're a family member, I'm sure that many of them on this call who have kids, like who doesn't appreciate in a positive way, I'll say, how much money we all spend on our kids, right? So in going out and raising the capital for that great category, recession proof for sure, but also great growth opportunity, not just from a return perspective, but from a return on emotion and power to really make the world a better place, and using youth sports as a great vehicle to do that.
Yeah, I love that analogy. Brett, maybe just a bit more like how do you think that the family office world will be building team brands? Like if you look at, Stephen Ross and some other players and like what the LeBron generation is doing. I'd love to hear your thoughts on, the next generation of brand building and some of these big, huge families, not just the corporates. What are you seeing next in the market the next 5?
Yeah, I think again the sea change in the decade that I've been involved in this space, the amount of family offices now that want to be in sports as an asset class. From my vantage point, I'm positively obsessed with sustainability, meaning that the venture has to be profitable. And that's why real estate becomes such an important dynamic with Rhode Island, having the real estate development rights. But I think Drew's approach is correct in the terms of really looking at all the different ways to play sports, with his youth apparel business in the sports industry. As I look at it, I want to have a platform for professional sports. I want to look at the supporting technology around it. Aura Ring is one of our investments that tracks your sleep and recovery. I absolutely love that product. I think there are just so many fascinating ways to invest in complementary businesses. And you mentioned kind of LeBron and some of these individuals. I mean, they've woken up to the fact that it's not about an endorsement per se. It's about getting equity in the companies and really having meaningful stake in terms of driving real value in product or other opportunities, teams even. I mean, LeBron's in Liverpool and Fenway Group, et cetera. So they're all amplifying their brand and their power and not just their balance sheet.
So you're both involved in innovative investment strategies across not just value creation, but also the community, also the governance side with the boards. I think it's a really testament to being able to bring best practices from private equity into independent investment platforms. So, in my opinion, that's something to really take note of, that those best practices are not limited to the large scale organizations. For example, at KKR, we see some significant emphasis on ESOPs with their team and their leadership. And I think that there's important lessons to be learned there. I'd like to talk a bit more about that employee and equity empowerment with you, Drew. Just talk a bit more about the Share the Gains program, using the athletes as strategic investors and really creating a greater deep incentivization and connection to the firm and the legacy of the company. It'd be great to talk more about that briefly.
Yeah, and share the gains is just one example of what we do to support those employees, and the impact of that is very profound. As an example, our company Barbecue Guys, they're based in Baton Rouge, Louisiana, and many of you may know there's sadly Baton Rouge in Louisiana has suffered from many hurricanes. So the last hurricane that we had, many of the people were dislocated. So we, from the GP, not LPs, out of the pockets of the people that run Brand Velocity Group, we all sent all the employees gift cards. And the response we got, just because it was totally unexpected, was just really powerful. But it's not done for any other reason other than it's authentic, and we really want to help those people in any way that we can. Some of the other things we do is we have personal business coaching for the CEOs, for the management team, and now like the other people involved. And I should mention, Share the Gains is not for the top executives because they get management incentive equity. It's really for the people on the ground. And again, with Barbecue Guys as an example, when we first announced it, we went and did financial literacy education for the team because they will stand to have transformational wealth with their company once we sell the company, and to have that impact and understanding is very profound. And that's something that's it's really important to us. And as we've got athletes on board, anybody who invests in any of our companies, they understand that 10% of our GP and other investors can also come along and support Share the Gains. And it wasn't a requirement, it was an option. And the last deal we did, we had probably about 40% of our LPs commit to Share the Gains, and that allocation was very powerful. And we see that continuing to grow going forward, which again is why family office community is so important to us, because we want that alignment with our LPs. We want to have the people who also support what we're doing, not just good investments, but also doing the best we can to make capitalism work in the most positive way for everyone involved.
We've seen a powerful development of the B Corp, of course, as a peripheral and similar structure to share community gains and greater impact in the community in terms of a for-profit organization. Brett, going beyond community, I think it's super important as wealth is built in the sports world. And with these celebrities, can be from the Kardashians, the media side, and Jay Salmons. It can be over to Will Smith. It can be over to LeBron, even Tony Robbins. It can be Mark Lasry. It depends who it is. But there's lots of investments being made with interesting platforms, from Endeavor to Liontree, Almond Company, your platforms, Aries. It's super varied, super complex. I'd like to talk a bit about philanthropy and where some of this wealth can go, and how to incorporate philanthropy into the wealth generation, into the sports investments. Brett, maybe you can share your views on that and draw some analogies to your experience in Rhode Island. And also, Drew, continue on that, share the gains in terms of actual philanthropy.
Yeah, I think all these sports assets, I mean, Ipswich, 150-year-old club that has a substantial foundation that's very ingrained into the community, making sure to find ways to positively impact on so many different levels and so many different demographics around the club. So, and I think you probably see some form of that with almost every sports franchise in the world. And certainly, as Rhode Island is, 6 months old now in terms of how long we've been playing, but we've established a foundation, and we'll start to make sure that we figure out ways to really give back to the community, provide access to those that wouldn't have opportunities, both to come to games, but also to participate in youth sports and a whole host of other things that really make you a valuable and cherished sort of resource in the community.
Drew, where do you see philanthropy going in general in sports in terms of nonprofits or two-tiered businesses, right? As these brands get built, let's say you can see these type of activities in soccer and tennis and so on. Like, it'd be interesting to hear your thoughts on where that's going to go.
Yeah, a lot of what Brett's talked about. I don't think there's any better representative of what community means than sports on a professional level, on a recreational level. So I think philanthropy has got to be part of the overall platform, proposition, connectivity that teams, organizations have in their communities. And I think that will continue to grow. And I also think there's greater enlightenment because of leaders like the ones we're talking about here who are doing things the right way. And that sensitivity, that level of commitment that's required if you want to be successful in sports today, I think philanthropy is really critical. And you can't just generalize, it means different things in different communities, but I think it is an integral part of success. And more team owners are starting to understand that, more of the investors are starting to understand that. And that's great alignment. And I think that bodes very well for the future and things that are really important for making this whole community and category improved.
Thank you for that. Okay, we'll wrap up soon. Brett, maybe share your views on maybe one of your favorite athletes, and what is impressive to you about that athlete in terms of their code of living or their approach to life, or what's inspiring to you.
Yeah, I mentioned him earlier. Didier Drogba joined our ownership group in Phoenix, finished his career with us. And for the uninitiated, he's considered one of the greatest players from the continent of Africa. He's considered Chelsea's greatest player. But he single-handedly stopped a civil war in the Ivory Coast. And I mean, on and off the pitch, he's just an extraordinary human being. And what one anecdote, he was about 40 years old when he came to play with us, and he was still the first player to show up, and he was the last player to leave every single day. And he had God-given talent that made him just extraordinary, but just a great lesson for everyone, just in terms of, the work ethic that he and so many of these incredible athletes approach towards their craft.
Yeah, and I guess in response to your question, Adam, it's hard to compare with that, but it is personal, I would say, with a high level of bias, but a high level of authenticity. Eli Manning was one of my favorite athletes. He won 2 Super Bowl championships with my favorite team, the New York Giants. But now having him as a partner and a good friend, he's an extraordinary human being, and the kinds of things that he does on a philanthropic level without looking for attention or visibility or acknowledgement or positive media. He just does it because it's who he is. And also the opportunity for us to have worked not just with Eli, but with the Manning family. They just do things the right way, and they're just such kind people, and really always thinking about the people that they're associated with and how they can add value to things they're involved in, but how they can add value in society. But most importantly, the word kind is definitely a great definition of who they are and how they operate, besides their football success, just as great people. So very fortunate to have Eli as a partner and the value add he brings to our business, but also as a great human being and a great representative of how to do things the right way.
Absolutely, it's a great selection and a wonderful family. I saw a quote that he said once, which is a lovely short quote, saying that he goes through life with a smile because I know things can be worse than they are. He's got a great disposition, and I'm so happy for you to be able to work with him. So I want to thank today our Family Business Audiocast attendees in our discussions about entrepreneurship, family-owned businesses, collaborating with family offices, involving them in governance, legacy, building those legacies and wealth creation together with our esteemed guests, Brett Johnson and Drew Sheinman. You can find them on LinkedIn, also Brett at Fortuitous Partners, and also Drew at BVP. Thank you so much for today. Brett and Drew, great to have you.
Yeah, thank you so much. And thank you to all who took time to listen. Thank you.
Thank you so much.
This is Adam Smith signing off. Stay tuned for the next episode of the Family Business Audiocast on LinkedIn.